Good evening, everybody. Hope everybody's having a nice winter evening. Tonight, we've got the great pleasure of having Michael Guest back with us. He's a very good instructor on day trading. So before my sound goofs up, I will move it right on to Michael. Michael, welcome again to the Candlestick Forum. We're once again anxious to see your information tonight.
All right. Well, thank you very much, Stephen. I appreciate it. And thanks to the rest of your team, Rick and especially Becky, who's walked me through a lot of stuff. So, thank you, everybody. My name's Michael Guess. I'm the president and CEO of TradeSafe. And tonight, I'm going to share with you 3 chart settings that are going to power your trading to much higher accuracy, because my goal is to have you, by the end of this presentation, stop using a one-size-fits-all approach. So I will be taking questions about a half an hour later from now, and I'll also make it possible for you to schedule time with me to meet with me privately on the phone if you have further questions. So before I get moving, I'd like one of you, 2 of you maybe, to type yes if you can actually see me and the title slide and you can hear me. Give me some feedback, folks. Okay, thanks so much, SP. All right, so I'm going to go ahead and proceed. And tonight, what you're going to learn, I'm going to make you a promise before we start, that you're going to have 4 secrets that will skyrocket your profits in day trading. First, you won't need to guess about where to get in or where to get out. I want to increase your trading confidence. Next, I want you to know how you can use cycles to unlock hidden trends and determine not just if there is a trend, how strong is the trend, how far will it go. Next, I'm going to share with you the actual chart settings that we use in our TradeSafe mechanical day trading system. So you're going to have the exact same settings that we use in our system. And I'm going to give you something else. I'm going to share with you how to determine the best way to manage and exit your trade instead of guessing, well, I don't know where to get out, maybe a Fibonacci level or a support or resistance level. That's guesswork. I'm going to share with you some custom exit strategies that will be tailored to what the market can give you. And since I know some of you have never day traded and maybe don't even have any desire to day trade, I'm going to invite you to stick around anyway, because at the end, I'm going to have a bonus. It'll be showing you how you can repurpose this information for swing trading, position trading. So I just answered your question, John McKay. All right. And once again, I'll introduce myself just in case you want to know who you're listening to. That's me. And I've been a professional day trader for a quarter of a century. That makes me old. I'm antique. But I founded TradeSafe nearly 20 years ago. I've graduated over 3,000 students. And along the way, I've created a host of indicators and mechanical trading systems. And in a past life, I used to be a psychotherapist, so I'm fully aware of the importance of discipline, trading psychology, and making sure that you do follow the rules. So if you've got questions, I certainly want you at the end of the main part of the presentation to be typing them out. Hold off on them right now so I can at least get through the presentation. But I will also, in a follow-up email tomorrow, once I get a list of who's attending here tonight, we will follow up with an email that'll have a couple of links. One link will be the replay in case you had to leave early. And the other link is going to be to scheduling time with me. It will not be a sales call, I promise that. It will be a chance for you to get your questions answered about what you heard tonight. And also if you have some questions about our primary offering, which is the Trade Safe Mechanical Trading System. Now, before we get started, I'm not going to read all of this boilerplate, but I will tell you that the FTC has a requirement. They're the people that regulate the internet. They say that no one is allowed to make a financial promise or guarantee, whether it's weight loss or whether it's financial or anything else, can't do it. So I'm not going to be doing that here tonight. Also, of course, it goes without saying, and you've heard it before, please don't trade with money you can't afford to lose. All right, we got that basically out of the way. Let's dive right in. What are some of the major problems that happen if you try to day trade today's markets? Because they're not like they used to be. Too many people try a one-size-fits-all approach. What do I mean by that? Well, they try to use a single chart or a single approach instead of what I call a custom-tailored adaptive approach. Because markets have personalities. They are unique. They are not all the same. You can't use the same approach over and over and over for each and every market. Some markets have a narrow range. Some markets have a large range. Some trend a lot. Some congest a lot. So you want to know, in this case, does the market that you're interested in trend? Yes, I know you can make money counter trend trading, range trading, and breakout trading, but they're not really consistently profitable. Trend following has been proven to be very profitable. So I do recommend that you consider that. Now, with the current political climate in Washington, actually for the last year or two, the markets have been churning a lot. There's a lot of volatility. That's a big problem. A lot of what used to work is not working anymore. And as I already mentioned, you need to know, as part of the personality issue, is the market you're trading a relatively large range market where you can expect follow through and make a lot of money on a trade, or it typically doesn't go very far when you enter a trade, in which case you shouldn't try to hang on and stick your neck out any longer than necessary. And of course, as I started out saying, please don't try to make all your decisions with just one chart. That is really like trying to cover up one of your eyes, and you'd be handicapped with that. You need to have both of your eyes. Now, how do we do it? Well, you see that camcorder? It's got a zoom lens. You can do the equivalent of zooming out with a wide angle, get the big picture, and zooming in closer to get the normal perspective of things, and zoom all the way in and get the real close-up of something. Well, you can do the same thing with charts because markets are fractal. You'll see patterns that repeat themselves. So from a wide angle perspective, a higher chart setting, you will know what's happening at least in the morning part of the session or maybe for the whole day. Now, when I give you the chart settings, you'll know exactly what is the wide angle setting, what is the normal view, and what's that low risk surgical entry setting that you want to use for entering trades. That's the one that is going to keep your risk levels the smallest. So that will be your smallest chart setting. This is going to give you a roadmap that you can follow. But before you can use a map, you got to know where you are on the map. You need to, with each chart that you're using, determine, is there a trend or not? Now, with the Trade Safe mechanical trading system, it's done for you automatically. We have both audible alerts and visual alerts. You can see it on the screen, or if you're in the kitchen making a sandwich, your computer will even talk to you and tell you that you've got a change in trend, or you're in congestion, or you're getting a breakout or a fake out. But I'm sure none of you probably have that trading system. You're just here to find out about these three chart settings. So what would you use instead? Any proven trend indicator. Above all, don't guess about, do you have a trend? You know, the old cliche, higher highs, higher lows, that's guesswork. I could get 5 or 6 traders together and say, show me exactly where the trend started, and I would get a variety of answers. You need something that is a proven trend indicator. And once you've determined whether you do have a trend on each of the charts, then you want to know how many of those charts are trending together in the same direction, because that's going to dictate the way you want to manage and exit your trade before you even enter the trade. You don't want to make that decision after you're in the trade because there's too much going on. You want to know what that exit strategy is beforehand. That's somewhat like playing chess. You want to plan ahead because that's what professionals do. This is going to allow you plenty of time to relax and be strategic. Above all, if you're into day trading and it's a new thing for you, please don't treat it like a video game and shoot anything that moves. It is not about reflexes. If you're chasing the market or you think it's how quickly you can click the mouse, then you're doing it all wrong and you're low on the food chain. Trust me. Because if you know how to trade strategically and plan ahead, then part-time day trading is actually a possibility. A lot of you have incorrectly thought, oh, well, maybe I've got a job or a part-time job, or I don't want to sit there all day long and get hemorrhoids. I don't blame you. But if you have a strategic approach, you know when you have the conditions that you need that enabled you to go ahead and say, hey, now it's time to focus, pay attention, and get ready for a setup for a trade. So what makes this all possible? I mentioned cycles, specifically ratios. Now I'm going to give you a formula. This is what I promised you I would do. I'm not just going to give away some settings. I'm actually going to teach you how you can do it for the minis. That's the indices, the S&P, the Dow, the NASDAQ, and the Russell, the big four. Now, once you learn how to do it for them, you can do it for the currencies, you can do it for other kinds of markets. The same approach works. So here's what you need to know how to do. You start out with what is called the daytime trading session. Now, these electronic indexes, the minis, they trade around the clock, 24 hours a day, right? Well, the majority of the volume is going to occur in Chicago between 8:30, the open, and 3:15 when the pits close. That's the majority of the volume. So here's how you calculate the chart settings. You want to take the very biggest number that is, well, let me start over. You would first calculate the number of minutes between 8:30 and 3:15. Now, I'm not going to ask you to type it out. It might take you a while to figure it out. I'll just give it to you. 405. That is the equivalent of a daily bar chart. It's more accurate, actually, than if you chose daily from a drop-down menu in your day trading platform, because if you are correctly setting it up to filter out the overnight trading and it just goes from 8:30 to 3:15, you're going to get each bar is 405 minutes in duration. That's one day. Then you're going to look for the next smaller number and the next smaller one after that. That keeps dividing into 405. So what's the next biggest number that divides into 405? 135. Too big for day trading. The next biggest number that divides into 405 after that, 81. Too big for day trading. None of these are so far anything you've ever seen in a drop-down menu. That's because the drop-down menus are generic. They're really, frankly, useless. You want to make sure that the software you use, and we use NinjaTrader, enables you to actually dial in the specific settings that you want for your chart. So let's continue with this sequence of numbers. We left off at 81, and if we use a 3-to-1 ratio, 1/3 of 81 is 27. That divides also into 405. And by the way, it's more accurate than a generic 30-minute chart, but it's still too big for day trading. You want to take 1/3 of that, and now you're getting into the settings that you actually will day trade with. You want a 9, a 3, and a 1-minute chart. That 3-to-1 ratio is critical. That's giving you the equivalent of a wide angle 9-minute that shows you what's going on for at least a half a day, maybe the whole trading day. The 3-minute chart is your dominant cycle. That's roughly an hour or two's worth of trading possibility that you could project. And then when you get an actual setup for entering the way you like to enter, you use that low risk surgical entry, as I call it, the 1-minute chart. So I've just taught you how to do it. You can do this same thing for other markets. Would all of you type yes if you are able to follow the logic of how this works? I want to get some feedback right now before I go any further. All right, I'm getting a lot of yeses. Thank you. So I've already shown you what it takes to identify the strength of the trend. That means yet, do you? Well, let's use a symbolic representation of a 9-minute chart. It's heading upward in a trend. The 3-minute may be as meandering slowly downward in its own trend. It's in its own little universe. And the 1-minute chart in its little universe has just begun an explosive rally to the upside. None of them are trending exactly together. What you would optimally want is this. Are you going to get it all the time, every day in and day out? No, you're not. It's actually somewhat infrequent. So this is why I had to teach my students a special way to evaluate strength of trend so that if you don't get all of the charts trending together, what if only some of them were? That's going to dictate the way you want to manage and exit your trade. So now I'm going to give you another freebie. This is the exact way that my students use to determine how they want to manage and exit a trade. And I use a teaching rhyme or mnemonic to do it. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if the 9, the 3, and the 1-minute charts are all trending together, up or down, you have the potential for a really strong move. You're probably going to get a lot of follow through. So you don't want to waste that on a scalp. You'd be leaving money on the table and then you'd feel bad after the trade if the market kept going after you exited and you'd have the woulda, coulda, shouldas. So you want an exit strategy that'll keep you in the trade as long as possible. I recommend a strategy called scaling out, where you hit an easy to reach profit target and you take part of the position off, half of the position, take it off the table. So if you were trading the minis, you trade units of measure, they're called contracts. If you were trading 2 contracts, you would take the first one and cash it out. And you'd make whatever you make at that easy to reach target. Now you've paid for the trade. And then as that strong move continues, as you would expect it to, you would trail your profit stop. That's when you have all of them trending together. But what if only 2 of them, 2 of the charts are trending together? That's going to be your entry time frame in the next higher time frame, which would be the 1 in the 3-minute charts. That would be probably a weaker, briefer price move, and you wouldn't want to expect it to go very far. So you would probably want to load the boat and just do what is called a scalp. Get in and get out at a quick and easy to reach target. That hopefully makes sense to you. So would you once again type yes and let me know if you understand the logic of how you determine your exit strategies. Give me some feedback on that. Yeah, great. All right, terrific. So this is all possible because of what are called cycles-based time frames. Your chart settings are your time frames, and they're tuned to each market based on when the market opens for the daytime session and when it closes. And then, as I instructed you before, you take the next smaller and smaller integers until you end up with the lowest 3. And in our case for trading the minis, which most people prefer to day trade the minis, you'll end up with a 9-minute, a 3-minute, and a 1-minute. Okay? Now, some of you might try to trade Forex. I did it about 15 years ago, and my opinion hasn't really changed. I personally don't like trading Forex for day trading purposes, mainly because it's barely regulated. It's like the Wild West, but that's another topic for another presentation. But here is one big objection. No starting and stopping times. It's just a continuous 24-hour market. You'll have to create your own synthetic chart settings. So if you insist on trading Forex, whatever pair you trade, you're going to, first of all, don't use the 1 minute for entering trades. That's too small a setting. You're at the level of statistical noise. You need to bump it up to at least a 3-minute setting. And then your top three settings, the wide angle, the normal, and the so-called low risk, would be the 27, the 9, and the 3. I would recommend that as a starting point. And you're not going to scalp because typically with price moves and Forex being currency, they do hopefully go quite a ways. I recommend only scaling out. And where do you scale out? That's going to be determined by whatever, pair you're trading. So that I don't have time to go into tonight. Again, I don't personally recommend Forex for day trading. Now, I mentioned that we would have a bonus. And that bonus is, how do we repurpose this for swing trading? So once again, I'm going to fall back on those indexes, the Dow, NASDAQ, Russell, and S&P as an example. Now, instead of the 9, the 3, and the 1 for day trading purposes, you're going to use for swing trading, that's position trading, buy and hold for at least a day or more. You want a 3-to-1 ratio, and you want the 27, the 9, and the 3. And you must wait until they all are trending together. Now, I've noticed over the last decade or two that typically at least a couple of times a month, you get this grand alignment that I'm speaking of. When you have that, you'll see it starting to occur on the 27, and when it's getting into a new change of trend, you'll drop down to the 9 to see when it goes along for the same direction. And then once that's done, then you wait to see if the 3 is also in that same direction. The very moment all three of them are trending together, you want the first pullback or retracement on a 3-minute chart. That's right, entering a trade using a pullback or a retracement. It's as old as dirt. It's very much like a stretched rubber band. If you can imagine prices moving up and then it moves back down briefly, it hasn't lost the trend. It's just profit taking. You may want to have it retraced to a moving average, like a 20 or 21 period moving average. When it does that and it's snapping back up, that's when you want to enter the trade. Now, in our trade safe mechanical system, all of this is automated, so you don't have to worry about it. But I'm showing you for position or swing trading how you can do this. So once you're in the trade, what do? Well, instead of taking off half of your position, like you would have done for day trading purposes to scale out, we're still going to scale out, but we're going to use sets of 3 thirds. So you must be trading at least 3 contracts if you're trading the minis. So your first contract would come off if you're trading 3. If you were trading 6, you take off 2, and so on and so forth, depending on how big your position is. So you would take your first one off at a $100 target. When you've reached $100 in open profit, take that first 1/3 of the position off. That'll pay for the trade. The remaining 2 contracts, the stop for them should be moved to break even plus 1 tick of profit. That way it'll pay for the commission. You've already paid for the trade. And now what do? You're going to trail a stop on that 3-minute chart until the close. That's if it makes it. If it does, then before you get to the close, don't do MOC, market on close, manually flatten the second third of your position. You probably will have racked up several hundred, if not 1,000 or more dollars just on that second third of your position. What do you do with the final third of your position? You have to switch it, stop from what it is for day trading to a GTC. That stands for good till canceled. That means it'll stay in effect while you go to bed. Now you've already got a paid for trade. You've got your stop sitting at break even plus one tick profit. If when you wake up the next morning and the market opens and it's still going in your favor, move up to the 9-minute chart to trail the stop. Use that one to give more breathing room to keep you in the trade for more than just the one day. If you do that, you could be in the trade as long as several days. Hopefully this makes sense. So would you type yes if you see how you can repurpose this for swing trading? Let me know. All right, great. Thank you, thank you, thank you. So what I would like to do now is quickly review the core concepts that we covered so far. First of all, make sure that you trade markets that have trending personalities. You may say, well, how do you know that? Well, if you've watched markets for a while, you know from day in and day out whether or not they stay in a narrow range, whether they tend to congest, or whether once they get going they have a larger range and they tend to persist and trend. I'll give you an example of markets that do trend, and then I'll give you an example of markets that don't trend. We already mentioned that the indexes do tend to have trending personalities. Currencies, we've all heard that they trend a lot. So if you are not trading Forex, but you're trading the futures version of one of the currencies, a popular one is the euro. 6E is the symbol. That one does definitely trend. Now, what about markets that don't trend? Well, I hate to break it to you. There's two very popular markets that a lot of people try to trade or day trade, and they may wonder why they're struggling. Well, those two markets are crude oil and gold. Actually, there's a third, and I'll get into that one in just a little bit later. Crude oil and gold tend to congest, and when they finally get to where they do go, it's due to what's called a breakout. And breakout trading is unfortunately fraught with breakout fakeouts. Many of you know that all too well. You get into the trade, and instead of going, it goes right back into congestion, and your stop gets hit, and you're frustrated. So if you're looking for trend following, crude oil and gold don't really, they're not good candidates for it. If you really want to trade the energy complex and trade one of the markets there that does trend, I would recommend natural gas. It actually does have trending characteristics. So moving along, once you have selected a trending type of market, don't try to use that one chart to make all your decisions. You want to be able to use, like a zoom lens, like I showed you before, multiple settings, different charts with different settings, a bigger setting for the wide angle, a smaller setting than that one for your intermediate or normal view of the market, and then a much smaller setting, the smallest one of all. That's the one that gives you the lowest risk for a surgical entry. And I already taught you how to calculate that and even gave you the three settings for day trading the minis. Your wide angle setting is the 9-minute setting. The 3 is your normal view. And to keep your risk really small for best reward risk ratios, use the 1-minute chart. But once you have that information, that's only part of the picture. You have to know how to utilize that for managing your trade once you get in one. Do you want to just take the same kind of exit every time, every time? Well, markets aren't giving you the same conditions every time. Those conditions change throughout the day. So you want to be able to adapt. And that's when I taught you the little simple rhyme. The one and the three need to agree, best as if all three agree. That's how you determine the strength of the trend. And if only two out of the three agree, you would want to scalp. If all three agree, you'd want to scale out. Take half of your position off the table and trail your stop using whatever method you prefer to use. With our trade-safe mechanical system, it's automated. It takes the guesswork out of where to get in and where to get out, and you will always know absolutely, like any true system, that there is no guesswork. It's Boolean logic. So you will want to pre-select your exit strategy based on the strength of the trend. You're going to either scalp or you're going to scale out. Okay? Now, finally, as a bonus, I showed you how you can repurpose this for swing trading. You actually take the same concept that you did before for determining what are the settings for day trading. And if it's going to be the minis, it'd be the 9, the 3, and the 1. And then you move it up to the next higher levels for swing trading, in this case, a 27, a 9, and a 3. And when all three of those are in alignment, which only seems to occur a couple of times or so a month, then you know you have the conditions for entering a swing trade. And you want to hit a target that's easy to reach and pays for the trade. And that's going to take off 1/3 of your position. I recommend a $100 target. So you're scaling out, but not of half of your position, but 1/3, which means you must have at least 3 contracts if you're swing trading, unlike 2 contracts if you are going to day trade the minis. So what do you do next? Well, if you've hit that $100 target, the remaining 2 contracts, make sure you've moved the stop to break even and 1 tick of profit. Again, our mechanical system automatically does that for you, so you don't need to worry. Then what do? Well, you just sit tight and wait to see if trailing the stop in whatever method you use keeps you in the trade until the close at 3:15. Just before the close, at least 5 minutes before, flatten the middle third of your position. And that will probably rack up an extra few $100s or more to add to your closed profits. Then what do you do with the final 1/3? You change the stop to a good till cancel so that it'll stay in effect overnight and be there to protect you while you sleep. That way, if when you wake up in the morning and you didn't get taken out of that third, then you're still in the game and you want to be able to step up your game and move it up to a 9-minute chart to trail your stop. That gives much more breathing room in order for you to stay in the trade, hopefully for several days. All right. So those are the basics that we covered here tonight. Uh, Gary is asking, does my system work on stocks? Gary, did you come in at the beginning? Yes or no, real quick? I just need to know if you've been with me since the start of my presentation. Gary, are you still here? Hello? Well, I don't know if Gary's exit. Okay. He's saying he has been here. Well, I went through a somewhat of a lengthy explanation about what I think are the best markets. And I think it would be in that category called futures and commodities. And I told you how to determine whether something has a trending personality. It'll work in the stock market, but my friends, I hate to break this to you. I was one of the original SOS traders some 25 years ago. If anybody knows what that is, I'm impressed. And you've been trading for a long time. but I used to be in what were called prop shops, and we would day trade the NASDAQ. And we found out pretty quickly that the institutions have to be dealt with. And nowadays, it's 10 times worse. I'll just summarize it by saying a few of my major objections. Aside from the fact it takes $25,000 just to open a day trading account for the stock market, that's the minimum that the SEC requires. The other thing is you have an uptick rule. You can't sell short unless the market moves up first. Uh, but probably some of the biggest issues have to do with what is called algorithmic high frequency program trading. They've got these computers that are placing thousands and thousands of orders in a thousandth of a second, and then they will switch in the opposite direction and spoof you. This really wrecks things. So the institutions have taken over the stock market for the most part. I personally haven't day traded the stock market since 2001. But if that doesn't convince you, here's another reason. All the big institutions co-locate their servers right there in the exchange itself. They'll beat you to the punch. They will get their orders in first because getting your order in matters. In fact, if they're not co-locating their server, they're using these alternative methods that bypass the broker. They're using Archipelago and black pools. So if none of this makes sense to you, you're already at a disadvantage. So that is the primary reason I strongly discourage people from trying to day trade the stock market. I hope that makes sense. Okay. Okay, let's see. And I'm glad you do, Gary. I'm glad you do make money. So I'm saying you can apply this if you're happy. Use it. I'm not trying to tell people what they have to do. I'm only sharing with you what I find is easiest. It is frankly far easier to day trade the minis, for example, than it is the stock market. Aside from having to choose from 12,000 or more stocks, you can specialize in 2 or 3 markets, and that little small basket can make you a ton of money. Okay? All right. Well, since already the questions are coming in, why don't we spend the next few minutes before we wrap things up? Let me get some more questions. No, I'm not leading you up to an automatic trading system. I don't have anything to sell you tonight. I'm sharing this information with you. Yes, I will be giving you some more free information that summarizes this and goes beyond it and present that to you in a few minutes, but it'll be free. There is no pitch. I don't do that. Okay? Okay, well, I don't know about that, Gary, but let's get some more questions. Anyone have any questions about what I've shared with you about your chart settings or about how to know when to scale out or scalp or how to repurpose it for swing trading? Any of those things? Feel free to ask. I'll answer them. And by the way, I already mentioned at the beginning of the presentation that once I get the list of who's here tonight or anyone that's registered, even if they maybe didn't attend, I will be sending out an email to you sometime tomorrow or the next day. And it'll have a link to the replay if you want to watch it. But it'll also have a link to my schedule calendar, and you can see the best date and time when I'm available, and you can schedule time with me. And I absolutely promise it will not be a sales call. I never ever twist anybody's arm. You're getting to talk directly to me, the developer. And you can ask all you want about not just this, but if you want to ask about the trade-safe mechanical trading system, fine, I'll answer those questions. In fact, a little bit later here, I'll give you a link so you can get more info if you want. But again, I'm not here to sell anything. Let's see. John is saying, does this work for trading daily futures charts? What do you mean by daily? I mean, If you mean you should be day trading during the daytime, that's when you really have the most volume. Is that what you mean? Versus at night or something? I'm not clear. Do you mean position trading, John? Yeah, I already covered all that. That's what the swing trading was. I went into great lengths about that. You did not catch that? And Keith is asking a question, how does somebody get a 27-minute chart? Well, I live in Austin, Texas, folks, and we have a saying in Texas. They say, don't take a knife into a gunfight. If you're going to day trade, trust me, there are a lot of professionals out there, and they know how to separate you from their money. They're using professional tools. You should too. Do not use things like Thinkorswim for your day trading. It's an amateur platform. It was designed for options and it had a limited amount of day trading capability grafted on. If your platform does not allow you to dial in the exact chart setting that you want, however many minutes it is, then you don't have a professional platform. TradeStation is one that is. It's been around a long time, but it's a little long in the tooth these days. It's kind of 20th century instead of 21st century. I personally recommend NinjaTrader. That's what we use for our system. Tom is saying, can I recommend a good futures broker? If you were to use our system, for example, and you wanted to use NinjaTrader, which it's written for NinjaTrader, they are a broker also, and they are top drawer. I've had nothing but the best experience with NinjaTrader. So I would recommend them. Some more questions. We got time for at least a couple more questions, and then we will be wrapping things up. Yep, RJO are fine. They're good. Uh, AMD, I think I've forgotten another one, is another good one. Infinity is a good one. There are several really top drawer brokers that are out there. Let's see, aside from this entry approach with scalping, what else do you like to look at on your charts? Well, that's a very open-ended question, and I wouldn't have enough time to answer that in detail here tonight, but I will tell you this. For our trading system, we only have 4 steps to entering a trade. We determine the trend on each chart, and we determine that agreement of trend, like I've shown you. Then we wait for a pullback or a retracement to a moving average. It's a specific moving average. And it's like that stretched rubber band that I told you about. Of course, it has far more precision and requirements for you to know that you've satisfied that step before you just say, oh yeah, it's pulling back. You want everybody that's trading it the same way to get the exact same answer. You then want a third step, independent, uncorrelated confirmation, a specific oscillator that we programmed that gets into simple overbought or oversold. That just helps you get reassured that the pullback's at its maximum point of excursion. And finally, we keep our risk under control. If you're going to scale out, we never ever allow more than $100 per contract risk. It's typically less. We don't use a fixed dollar stop. And if we're scalping, we keep the risk even smaller, $70 or less. And trust me, our stops are not too tight. We have a winning average among my graduates of at least 87% winners. And one of my students that graduated just the other day, he had a statistically viable sample of at least 30 trades to build his track record. That's his benchmarking. And he had 29 winners out of 30 trades. I didn't tell him what trades to take. This is after he finished the course using our software. All right, so let's see. Well, regardless, if you can set it in 27-minute, that doesn't take away from the fact that Thinkorswim is not a professional grade platform. Get over it. I'm sorry, I don't want to disrespect them, Tom Post, who designed it before it was sold to TD Ameritrade, he lives not far from me outside of Austin. And he told me it was never his intention to have it be a day trading platform, but there was just a lot of pressure to add that feature. Okay? Now, Dave is saying, how do you determine the trend on a chart? There are literally hundreds of indicators out there that purport to be able to do that. So I'm sure you'll find one that you're happy with. Check it out. Make sure it does it consistently. Which ones, says Tom, tend to trend more than any others? Well, I already pretty much answered that question. I gave you the recommended ones above all others. Well, I said 3 indices out of 4. Let me answer this really quickly because we are running out of time. The one index I do not recommend that you day trade is, believe it or not, the ES. That's the S&P E-mini. And that's because it is so popular and so liquid that the algorithmic program high frequency trading has infiltrated it. The institutions are there, the hedge funds, the mutual funds, to throw off their risk. They go into the ES to do that. So you won't have smooth trending there. You're going to get a lot of spoofing and other things. So I don't recommend the ES. I recommend the NASDAQ, the Dow, the Russell. I recommend any currency like the 6E euro, or if you want to trade the energy complex, as I said before, I recommend natural gas, NG. Okay? Well, folks, I want to be able to wrap things up here and stay within my allotted time. So I want you to know, again, I said I have nothing to sell tonight. You can have a summary of everything that was in tonight's presentation and more, far more, better illustrated in a free ebook. And in order to get that ebook, and maybe Becky can post that link right now. Here's the link in case she doesn't. It is daytradesafecom/candlestick, because this is the Candlestick Forum. And this is my little free offer to you to get that free ebook. All right? So, and that's fine, Gary. I'm not here to get into a debate. All right? I've been trading for 25 years, and people ask me what works. All right? Thank you very much. So, wow, Becky, that's not what I thought it was going to be. Is that the link that she gave you? Holy cow. That's not the same one that she gave me. All right. Well, folks, it does track to that. Well, then, folks, what she said is what I want you folks to use. You can go ahead and copy that link, write it down, and that'll entitle you to a free copy of the ebook. Now, several of you had asked me about the TradeSafe mechanical trading system. I'm not here to promote it. I'm here just to share with you some free information, let you know how you can get this free ebook. But if you want to know how our mechanical trading system does work, this is the link that will take you there. You can do that after you're done here this evening. You go to daytradesafe.com/trading-workshop, and that will take you to basically a replay of a presentation that I had done that breaks down exactly how the TradeSafe mechanical trading system does work. And she's okay. Now she's put the other link on there also, just in case. But the one that I'm showing right now is to give you access to a free webinar. It's much longer than this one. It'll go about 90 minutes, and it uses live charts with real trading examples and shows you exactly how the system does work. But again, I'm not here to pitch that. I don't want to, break my word. So She may, yep, she's already posted that link. So does anybody have any other final questions? Yeah, I think you might have missed, I don't think she missed a slash. I think she did a good job. Oh, she did, yeah. After daytradesafe.com, there is a, no, she got it. She got it. Sorry. All right. She'll retype it if it's wrong. I'm not going to tell Becky what to do. She's doing a great job, I'm sure. Uh, the bonds, well, the bonds have the same problem as the ES. They are extremely liquid, Tom, and that means that you've got a whole lot of algorithmic trading going on there. I would instead recommend you trade the notes, 5 or 10-year notes, instead of the 30-year bond instead. Besides, they're cheaper. They're not as liquid as the 30-year bonds. Don't cost as much. The margin is less. And by the way, folks, if you are interested in wondering how much the margin requirements are for day trading the minis, it's only $500 for each contract you trade. So theoretically, for $1,000 or more, you could open an account, but I don't recommend that small an amount. I recommend personally, if you're going to trade 2 to 4 contracts, have about a $5,000 account. That way, if you have some losers, you won't get into an emotional state of mind and feel all that pressure. All right? Don't want to trade with your back to the wall. Well, thank you too, Tom. And I want to thank all of you very much for taking time out to join me this evening. And once again, I want to thank Stephen, Rick, and Becky for making it possible at Candlestick Forum for me to share this information with you folks. Thank you very much. Bye-bye.
Thank you, Michael. Very good stuff. Take a look at it, everybody. This is good information to have in your arsenal of trading techniques. And Michael, appreciate you spending the night showing us this information. With that, everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.